Hey everyone, welcome back to the channel. Warm welcome to all the new subscribers. Really excited and happy to have you. In this channel we talk about growing passive income through dividend growth investing. And in today's video I want to talk about a couple of things. I want to talk primarily about real estate investment trusts or REITs and why I've decided to invest in real estate investment trusts, and particularly using the M1 Finance platform. And so that's what I really have for you today. I'm going to talk about how I personally invest in real estate investment trusts using M1 Finance. But to start off, I really just want to take a textbook description of what are real estate investment trusts. Back in the 60s is when this concept started, where the government decided to help out growing companies, and they changed some of the tax laws for some of these businesses that were centered around more of your brick and mortar type businesses that have actual physical structures. And so what it is essentially is REITs are passing through, are passed through equities in which the company pays so the company here, the REIT, pays no federal income tax as long as they pay out at least 90% of their taxable income as unqualified dividends to investors. Now, that's kind of a mouthful, but essentially what this means is companies, as long as they're paying out 90% of their taxable income, they're not going to be taxed at the federal level. And they're going to pass on those savings to their investors in the form of dividends. So that's why you're typically going to see a REIT or real estate investment trust with a higher starting yield. But as an investor, you have to also understand, I think this is the key thing here, is these dividends are coming in as unqualified income. And so when you compare it to your traditional U.S. equity companies, like for example a Coca-Cola, Pepsi, where you're getting paid around a 3% dividend there, that is taxed at a qualified rate. And it all depends on your tax bracket. I'm not going to get into that in this video, but that's really the primal distinction between when you're looking to invest in real estate investment trusts and your typical equities, your stocks, your U.S. companies here. Those are the main differences. So with real estate investment trusts, there's a couple things to kind of look out for when you're first looking to invest in REITs. There's a couple different types of REITs. This information is being, from REIT.com, great website if you're looking to invest into real estate investment trusts. REIT.com is a great resource. I'm not affiliated with them, but I get a lot of my information through them. Great asset. So the two different types that I'm going to be talking about today primarily are going to be equity REITs and mortgage REITs. Now, these are important because they're handled a little bit differently, quite differently actually. So with equity REITs, these are going to be, your office buildings, your shopping centers, your apartments, those things that you can typically see with your own eyes as you're driving down the road and, you see a storage unit off to the side. That's going to be your equity REIT. Now, another type of REIT is your mortgage REIT. Now, mortgage REITs, they're really just talking about the mortgage itself, the interest that's being paid. And so these are a little bit riskier in my personal opinion, compared to your equity REITs. They're very sensitive to interest rates. Now, obviously, equity REITs are also going to fall into that category of being sensitive to interest rates, so that's something to be aware of. But I invest probably about 99% in equity REITs and about 1% or so in mortgage REITs. And your typical REIT, your equity REIT, will have anywhere from a dividend from 5 to maybe 6%, maybe 7%. And your mortgage REITs, typically they're going to be 7 plus, typically in your 10, 11, 12% range. All right. Now, another thing that I want to go over here briefly before we go back into M1 Finance and look at my individual slices, the different sectors that you can find within a real estate investment trust. Just some overall information. Well, what kind of REITs are out there? What are the different sectors? Office buildings, for example, would be a type of REIT that you could invest in. And if you've ever been to Chicago, New York, where you're seeing skyscraper after skyscraper, you can invest into these type of real estate investment trusts. Another example would be an industrial REIT. Now, with e-commerce ever growing, with Amazon taking over the world, I see a lot of potential going forward with Amazon and with industrial REITs. And I'm going to take a look in a second here at how these individual sectors performed during the Great Recession, because I think that's incredibly important. As a dividend investor, we want to look and make sure that our investment is safe. And we want to see, okay, how much risk are we taking on? And I like to analyze that by looking at, what has been the performance in the past, particularly between 2007 and 2009. Another type of REIT could be a retail REIT. Now, we know that, if you've been in certain places in the United States or across the world, these shopping centers that were once booming, you would get an Apple store in one of these malls, and then all of a sudden everyone and their dog was walking around in these shopping centers. It's not so much the case today. These shopping malls are pretty much ghost towns. For the most part, in many major cities and across the world, both in Europe and so forth. Another type of sector would be lodging. So hotels, if you're familiar with that industry or that sector, lodging is another type of real estate investment trust that you could get into. Residential REITs. Now, I think this is really interesting. This is what definitely will catch your eye, as well as hotels and those massive storage unit complexes. This is another one. If you live in any major hub, whether it be in San Francisco, in LA, in New York, and on the East Coast, and also here in Texas, where I'm at, you can't go anywhere in any of the major cities, in Dallas, and San Antonio, and Houston, and Austin, without seeing massive residential, like multi-family units, and this is something that I'm really interested in, because I used to actually live in a multi-family unit, and it's incredible how these units, how they can cash flow. It's incredible. Another type is going to be your timberland REITs. Now, I think this is not something that your average REIT, your average beginner or new investor would kind of think of. Well, okay, you can actually invest in forests, and that's I actually have one timberland REIT in my portfolio as well. So, coming back to what I was talking about with how the different REIT sectors performed during the 2007, 2008, and 2009 time period, where we had the financial crisis. It was sparked through the mortgage crisis, where people were losing their homes, and there was fear, and everyone was just it was a really tough time. So, and different states and cities were impacted differently across the country and across the globe. Now, over here on the left, starting with lodging and resorts, this is a sector that was impacted more so than the sectors here on the right, for example, like healthcare. So you can see here lodging and resorts. These are, for example, your hotels. These are very cyclical businesses. These are businesses or real estate investment trusts where it's really consumer facing. It's really dependent on consumer confidence. If consumers are buying, if they're not holding their cash and hiding it under their mattress. And you can see here in 2007, under lodging, it was down 22%, but actually down 60% in 2008. But back in 2009, it just sparked right back up. So really a growth sector within real estate investment trusts. The next one is mortgages. Also fairly, strongly impacted during the recession. They didn't recover quite as much as lodging and resorts. Industrials, really interesting. 2007 didn't get impacted at all, but in 2008, incredibly impacted, the most across the board, and they've still struggled to come back from their lows back in 2008. Another sector that I think a lot of us are familiar with, the retail sector. When we think of REITs, it's just kind of how it works with consumers. at least it is with me, is when I think of real estate investment trusts, I typically first think about shopping centers and malls. I think it's just, what we're exposed to, and it also depends on where you live and such. But with the retail sector, it was hit pretty hard. Not as hard as others, but it was hit hard. Offices, diversified. It's a real estate investment trust that has their foot in different areas. They might be in lodging, they might be in office buildings, they might be in industrials. So diversified sector. Residential, also impacted, but not as severe as the others here on the left. Self-storage. Now, self-storage, you have to also take into consideration, the impact that it has on individuals when they're storing stuff. They're not doing it in most cases for the short term. They're doing it for a longer period of time, and it's more difficult for them to move their stuff. And it's more of a sustainable business model where if somebody's gonna store a unit there, it's more predictable. It's not going to have these massive spikes like you would here in lodging and resorts. And another sector that I personally am really interested in, with the baby boomers only getting older and near closer to retirement, is healthcare. Healthcare, it was not impacted in 2007, very minimal in 2008, and it's been just spiking ever since. So I also see, with an aging baby boomer group, I think this is going to be an area that's going to continue to grow. And it's not just, residential full-service apartments, but it's also, it could be like hospitals. It could be your, specialized units where specialized doctors go and they rent out the spaces. So it's not just talking about service departments. All right. So next thing that I want to do is I want to dive in and I want to take a look at my platform, my portfolio, how I invest into real estate investment trusts with M1 Finance. And for those of you that have watched other videos of mine, I have two sub-accounts here within M1 Finance. The account that you see before you here is my main portfolio. This is my passive income portfolio. This is where I invest pretty much solely into U.S. equities. And so it's all centered around qualifying dividend-paying companies and dividend stocks. But today I want to take a look at the real estate account or real estate portfolio here within M1 Finance. Now, I don't have near as much invested into this account. What I do with M1 Finance is I leverage dollar cost averaging. I shared a video about this last week. This is something that I live by. Regardless of what the market is doing, I'm always buying. I'm always averaging in. If the market goes up, great. If the market goes down, great. I get to buy something at a discount. It helps me to control my emotions. It's something that's worked for me, and I can plan to continue doing that. And so with my real estate investment portfolio, I set this up 2 months ago, and I really haven't touched it since. I've done a few things here and there, but for the most part, I set it up. I took a methodical approach on how I wanted to set it up, and I set a few principles in place. Okay, how do I want to diversify within real estate investment trusts? And I did it primarily based off of this chart right here. What is my risk tolerance? How much do I want to be invested in lodging, industrials, retail, and so forth? And I've set the target allocation accordingly. Okay, and what I've done is I'm investing, for full disclosure, I invest $90 a week in this account, in this portfolio. $50 on Monday, and I can actually show you here. Let's show you here. So I invest $50 on Mondays and then $10 Tuesday through Friday, and I just let it ride. That's what I've been doing for the last 2 months. That's what I will continue to do, and I really don't spend hardly any time into this account because it's really maintenance free. When I'm investing in real estate, though real estate investment trusts are much more liquid than other forms of real estate investment options or vehicles that you could take. For example, purchasing a rental property. This is not a liquid asset. This is something that you are not going to just, I'm not talking about flipping homes. I'm talking, and I don't flip. That's not something that I specialize in. I'm a buy and hold investor, and I've also looked at other options of investing in real estate. For example, Fundrise. If you're familiar with Fundrise, I've looked into it, but also once again, the liquidity is probably my top priority when it comes to this, because I just purchased a home half a year ago, and so I'm invested in real estate in that sense, and I'm living in a area where I don't plan on living forever. And so being able, and I'm also in a very cyclical market in my profession. And so at a, snap of a finger, I could be, if there was a recession, I have to be very flexible in my personal life. And so that's why I've chosen the route that I have. And that's why I'm not so interested in Fundrise, because with Fundrise, you have to commit for at least 5 years. This video is not a review on Fundrise. This is just an example of why I've chosen real estate investment trusts over other avenues, other options. I do intend to invest into rental property here throughout, in the coming years. But for now, I would like to get a little bit of exposure to real estate investment trusts and to real estate through real estate investment trusts. And I'm full aware that this is in a taxable account. I personally do not believe, or I don't, in my particular situation, everyone is different, that the tax implication is that discouraging for me personally to not invest into real estate or real estate investment trusts in a taxable account. Now, on YouTube here, I don't share my 401k or my Roth IRA. In these portfolios, I also am invested in the Vanguard VNQ. So I do leverage the tax advantaged account there. But that's not something that I really go into detail. I may in the future, but that's not something that I share today. I'm just sharing here my main portfolio as well as this portfolio here on YouTube. So that's kind of the reasoning behind why I've chosen this route. I personally, I really enjoy it. I think this is something it's hassle-free. I don't have to fix any toilets. I don't get any calls late at night from tenants where their AC is not working or something happens. I can, and this is not a massive chunk of my weighting in terms of my allocation of how I'm investing. Now, some people say that you should be investing between 10, 15, maybe 20% into real estate. This represents, I believe, I think 20%, give or take, of what I invest here in my M1 Finance account. So I don't invest more than 20%. Right around 20%. And this is how I have it set up. So I break it down by slices by sector. So in the first slice, I have my diversified one and my specialty. Once again, specialty could be anything from your cell towers, your very interesting Lamar advertising. If you're driving on the freeway and you see a billboard, probably from Lamar. Also, it could be a casino and others. It could be like a AMC cinema. So a lot of different things in the specialty sector within real estate investment trusts. Diversified, I have WPC, I have good, and I have VER. In the next slice here, I have self-storage and residential. Residential, I've broken it down into these 6 slices. Okay, not too heavily weighted, and once again, the portfolio, I've only been funding this for the last 2 months. In self-storage, I've broken it down just to 2. I personally know these 2 companies fairly well. I've researched them, and I know that there's others, but these 2 are my personal favorites. Here in Texas, you can't drive anywhere without seeing public storage. I mean, they're everywhere. Okay, Next is healthcare. Let's take a look at this. These are the holdings or the slices that I have in healthcare. Big fan of ETR, very well diversified real estate investment trust. LTC, a lot of dividend investors love investing in REITs, myself included, because you're also getting a lot of your dividends paid out monthly. I think that's why a lot of people absolutely love realty income, because I think it's the slogan is even the monthly dividend, or they're paying it out monthly. So huge fan of realty income. Also SPG, Store, FRT, and Kimco. I have a little bit of a smaller slice in Kimco. They're not I'm a little bit of a bigger fan in SPG. I think SPG, it's going to take a lot more for Amazon to kill out where SPG has their shopping centers and so forth. I think SPG is a little bit more of a safer long-term bet than a Kimco. All right, and I also invest in real estate investment trust. This is a smaller percentage. I know that this provides a little bit of overlap. I think there's around 200 real estate investment trusts, 200 REITs, and there's definitely going to be some overlap with having a individual REIT in the portfolio as well as ETF. But I also have these here as well. I like to be broadly diversified, despite even, there is going to be a little bit of overlap. Also have a small percentage, a small exposure here to international real estate through VNQI. It's pretty small holding though. And lastly, in timberlands, the Weyerhaeuser company, German name for all those German viewers out there. Weyerhaeuser, I think is how you pronounce it in German. Fun fact, I actually lived abroad in Germany, so I should know this. Lived abroad in Germany for almost 8 years. Was down in Munich, primarily. Was also in Frankfurt. Did my master's out there. Absolutely love Germany. I've been back in the States for a couple years, though. Also, one of the reasons why I've chosen to invest in real estate investment trusts, and I haven't got into real estate sooner, because I've been traveling for the last 10 years plus. I haven't really been living in one single place because I've been moving, and this is part of the reason why, talking about the liquidity of it, why it's so important to me personally. This is why I have also chosen to invest in real estate, because I don't know, once again, because I'm in a cyclical job environment where I might be here in 5 years. So I have to remain flexible. But my goal is long term to invest further into rental property. But right now the time is not the right time for me personally. All right, so everybody, this is my portfolio. This is how I invest into real estate investment trust with M1 Finance. Once again, this portfolio here, I have it on autopilot. I invest $90 a week. I let it sit here and I let it ride. I have 43 holdings in this portfolio. Of those 43, 4 of them are ETFs. So 39 individual holdings. I have 1 mortgage REIT and the rest are equity REITs. All right, everybody, I hope that this was helpful. I'm a huge fan of investing into REITs. Once again, for all the reasons that I just explained, for my personal situation, I don't think that this is necessarily the right approach for everyone. It's incredibly important that, if you're going to look into REITs, that you understand the tax implications that come with that. But for me, I don't see it as a major drawback. I don't see it it's not significant enough for me to not invest into REITs personally. But I can tell you right now, I would never have taken an approach like this had it not been for M1 Finance. With Robinhood, I could have done something similar, but I don't think it would have been required a lot more hand holding. Whereas with M1 Finance, I set it up. I've done my due diligence when setting this up. It took me a good couple of days and weeks to figure out exactly what companies I wanted to add into, the target allocation. I may change this as developments in the economy come up and what the Fed's going to do with interest rates. But for now, I'm pretty happy with how it's set up, and I just let it sit there and run in the background, and I'm spend the majority of my time in my passive income portfolio here, where I have a little bit of a more hands-on approach. But everybody, that's my journey, how I invest into real estate investment trust. I hope that this was helpful. If you're new, once again, I'd invite you to subscribe if this is something that you're interested in. On this channel, I talk about growing passive income through dividend growth investing. If that's something you're interested in, hit the like button, subscribe, and I'll catch you in the next video. Thanks, everybody. We'll talk to you then. Bye-bye.